Hey traders, Raghee here. Happy Wednesday, everybody. Welcome to Charts. And where is my coffee? Well, we'll grab the water here. Welcome to Charts and Coffee. Great to see you all. Okay, so what do we have going on this morning? And, I'm going to give you all a quick sneak peek at the notes that I'm working on for the live trading session for Sector Secrets. And it's just some of the key points that are going to keep us on the right path and hopefully also lead us to building the best possible watch list that we can as we go into the volatility of GDP, PCE, Fed Powell's speech on Friday, what that means to when taper will begin, and how many meetings will it take for us to whittle that 120 billion down to zero. And by the way, if you haven't checked it out yet, there is an update at the Simpler Trading YouTube channel, yesterday's free video, where I walk through sort of crunching the numbers of all this and what data points are going to be sort of the justification, the validity even, for what the Federal Reserve is planning to do. So got a lot of interesting stuff heading our way. Great to see everybody. Good morning. Good morning. All right. So let's get to it, shall we? Let's grab our first question. Hey there, James. Good to see you. All right. So first question is, I took a short in Jets. Okay. Just jump on over to Jets. Took a short in Jets yesterday as it rallied to the wave for T1. Would I look at the Darvis box or step in front of a previous low around 21.30? So this is a nice short. And, it does seem that we travel up to the middle of the wave, the 34 EMA on the close, right? Before we head lower. So, I do see this point of control, and I can see the previous highs were very close to that middle line. So the question is, for the first target, what would I look for? Okay, great question. I was just writing some of the explainers for one of the webinars we have coming up in September. And targets, I was just talking about targets and looking at previous highs or lows in this case, and gap closes. I think a lot of times we omit the significance of support around gap closes. I love Darvis, of course, but gap closes are one of those really basic, elemental technicals that doesn't require a lot of high-level charting technical skill to find. That's why we love them. The simpler something is to see on the chart, the more it's going to be reacted to. Do we react to GAN levels? They're perfectly fine. But do we respond to a 200 period, see SMA or EMA, right? So if there's something obvious and simple, like quite literally a hole on the chart in price action, so I would say you're going to deal with some resistance to the downside, or I should say support, around 22.30, 35, and then around 21.90. And you're right. I don't want to put my initial target really any lower than 21.30. So yes, 21.30, I would step out in front of that level because everybody sees that level. So step out in front of a nickel. It's called stepping out in front of size. I think that's something, a phrase that Jeff Cooper coined. So you want to step out in front of that likely size. I would even say take the low from August 20 and maybe step out a nickel in front of that. But you are going to have some obstacles to the downside. And those two gap closes are probably going to be two of the steps that buyers might be waiting at, or at least maybe proactively take profit at, say, 22. You see what I'm saying? Again, nobody knows. We can only say the path that is most probable in a double red it's down. And then what are the obstacles along that path? And that's really what we always want to take a look at. What are those obstacles along the path that we should recognize and respect, and how are those obstacles going to change our trade or risk management? Okay, but nice short. Interestingly enough, within the IYT, which is not as nice a downtrend as that jet, we've got Dow and Love also doing something pretty similar. So good stuff. Hey there, Sean. Good morning. You mentioned last week that you wait until after 10 to decide on whether or not to take a paper cut. Yes. So if I'm going to take a paper cut, which is, our nickname for just taking that small loss, taking our medicine, right? I like to wait till after the clearing. Yes, because the clearing usually is not necessarily indicative of the trend for the morning or even the trend for the day. So I will typically wait. That being said, you've got to respect that account threshold, not just the trade threshold for risk, but the account threshold. And you've got to respect that. So yes, well, I will typically wait. I know that it may not necessarily be what everyone can do, but I will say most of the time, nothing is all the time, but most of the time, that waiting during that very volatile initial reaction, oftentimes is not where the market's going to be at 10. So yes, I do wait. And then the question about stops. I was just talking to Lorna about this as far as, what we're going to do in the live trading and communicating some of the ideas about the levels that we have that are part of the trade plan when I send out the trade setup alerts, and what are physical orders in the market. And you ask a great question. The initial stop, what I call the risk-based stop, the classic stop loss, right? I don't place that physically in the market. I have alerts all over my charts. I mean, there are alert levels that I want to be, alerted to when the market reaches certain levels. So those are all decision levels. Do I decide to get in? Do I decide to get out? Right? So I have alerts all over the market, but I don't necessarily have a pending order, especially on the option side of things. When it comes to break even and trailing, yes, the alert is usually going to accompany a physical order. So I hope that helps. Next up is, good morning. TLYS. All right. TLYS. Nothing I can do with this. You see, it's already made a move, right? So I'm not a momentum trader. I don't believe, for me, it's the way I'm wired, right? So I accept that some people are, some people aren't. So I look at something like this and I can see what led to the move higher. I can see what some of the choices were. And it was very easily a lower half of the range type of preemptive long position. There was no short here. You can take a look at the JT multi. Never was there clarity on the short. However, in that chop, in this pause, within the context of what was an uptrend, you position yourself at the lower half or the lower quarter of that range, knowing that you might have to wait a bit before the move actually happens. This, from chop to actual breakout, took, over a month. So whenever you find a choppy market, remember, the chop is not the enemy, especially when you have clarity before the chop. The time it takes before momentum really gets going really is the enemy, because if you're positioned in an option, the theta decay monster is always catching up. Time is the one thing we cannot outrun in any way. So if I know that that time to expiration closing in is the time decay, is the theta decay monster that I know is going to continue to erode premium. Remember, options are depreciating assets. They're depreciating things. The biggest enemy to a trade that has gone into chop is, when the heck are we going to get the move like we see on the 24th? So, but once that move is made, here's what I'll say now. If you see a move like that, you proactively scale out of a percentage of your position if you're already in. But I will not engage this move. That's not part of my trading approach. But nice move. And, you've got a 16.5 strike, so you're in the money. or just basically at the money. And what you right now, and again, I don't like to go back and be a pebble in a shoe, but 16, so the trade is so far outside of what my strategy typically is that, what I'm about to tell you is not going to help you now, but maybe next time. When you see chop, cut the chop in half. Look at the lower half of the range. 14 or 15 is the highest strike that I'm allowed to buy. So where you are right now is really outside of where I can help you, because I'm not going to have a momentum game plan here. So, what you're hoping to see is that by going to a slightly higher high, maybe that attracts more buyers. Hopefully there's some more upside, and that at the money option is going to continue to move higher through 17. But I'll tell you what, my first inclination always is 1690 is going to be that first target. That's going to be the obstacle. You'd also like to see support at least at 1630, because we've got a nice volume ledge. And if this market's going to surge again, that support is basically kind of the floor that this ball could bounce off of. Okay. So again, I'm not a momentum trader. I'm seldom going to be helped in these situations. And I think it's really important to basically, from someone on this side of the mic and the camera, to say, look, this is not my typical pitch, right? This is not what I would swing at. It's best to find someone whose pitch that is, right? Okay, next up, how do we identify weak ETFs and stocks in them to short? We find things in downtrends. We find like jets. We scan the market. I don't believe in scanners. I'm not a scanner fan. There are some great ones out there, but I'm not typically going to build watch lists based on scanners. So I know usually the idea is, how do you scan? I actually do what was the old school way of scanning. You look at the charts. You go chart after chart after chart. I remember one of my first mentors on a Sunday, and I got this habit from him. He would look through anywhere from 200 to 400 charts on a Sunday. That's how I scan to this day. Very old school. So on a Sunday, and I love it during football season, I can watch the afternoon game. I know I've got about 2.5 hours of good white noise and a game on, and I will just quite literally pull up symbol after symbol after symbol, and then I'll pull up multi-chart after multi-chart. And I like it that way. I feel that I have a very good tactile look at the structure of the market, as opposed to looking at a list of stocks. And even if I use a scan and I get a list of stocks, I still go and look at chart after chart after chart. So you find a downtrend, you pull up a multi, and you find more downtrends. I mean, it's really, I'm not trying to oversimplify. That's exactly what I do. Now you might say, well, how do you know it's a downtrend? You have to go look at all the different sectors and the indices and the niche ETFs. And then you look at the stocks that are weighted within them. Now that might sound like a lot of work at first, but once you get the hang of it, you'll realize just how effective it is and how it really isn't truly all that time consuming. You'll just have to trust me on that one. Okay. Do I know the last time the Fed had no stimulus? Pre-08, right? Pre-08, there were clearly periods of time, but we've been under such a prolonged period of spending in this regard. Yeah, pre-08 is all I could say, Jeff. Yeah. And by the way, the equity markets are not going to like taper, but they will adapt, as we all will, as long as it happens slowly and the messaging is projected and clear. This market will adapt to a reduction of the $120 billion in spending. The market will adapt. The equity markets will adapt to less stimulus. Certain corners of the market are going to hate it more than others. Tech clearly is going to hate the prospect of higher interest rates. And taper is a de facto rate hike. It just isn't a hike in the traditional sense of looking at the Fed funds rate moving higher, but it is a rate hike. And if the markets can just incrementally handle it, which is what I think Powell is setting up for, we will handle it. And are the markets going to behave as they have the last 13 years? Look, there's a whole generation of traders that don't know what to do with a market that hasn't been moving pretty much straight up. I think traders pre-2008, I think traders in the 90s, say the tech bubble, look, we're all going to adapt like a lot of traders are, to just a potentially. I don't know that the Federal Reserve doesn't pull a rabbit out of their hat and say, look, we don't mind inflation running to 3%. I wouldn't be surprised. I do think they're going to do it slowly, though. I really do. I don't think they're going to launch a grenade into the market. I really don't. Remember, Powell is a Wall Street guy. He's a Carlyle Group guy. And if you don't know what the Carlyle Group is, look it up. He's a Carlyle Group guy. That's where he cut his teeth. He's a Wall Street guy. And believe me, he's keenly aware of what they've done to inflate asset purchase. They may not say that, but they know it. I mean, these are not stupid humans. Some of the things they do, I don't necessarily agree with, but they're not dumb. He's keenly aware of it. And I think that's why, because he is a Wall Street guy, he understands how he has to do this. So I'm really not a bear in any way. Are we going to get pullbacks? Of course. But the trade for me isn't guessing at when the pullback is going to happen. The trade for me is letting that pullback happen. Let other people guess. I hope they're right at some point, because I would love a significant multi-percent pullback to put more names in my portfolio, my longer term, longer duration holdings, and put on some new trades. And I'm not having to flirt with shallow retracements and hope that this parabolic market, which, by the way, we are not overextended. If you look at, I'm going to talk about, here, let me show you the notes I'm going to be. So we are not overextended. We are not parabolic. We are not overaccelerated. Just because a market is high doesn't mean it's overextended. Overextended is a measurement of volatility, not of we've gone too high. I mean, really, what does that even mean? And remember, too, if you're using an oscillator, say a slow stochastic, and that slow stochastic says, oh my gosh, look, we're overbought. That's like asking a fish how to fly. Well, it could be a flying fish, but that's really not what it does. An oscillator is constantly looking for overbought and oversold. So within the context of a trend, it's going to constantly say an oversold market is oversold, or a downtrend is oversold. And it's going to constantly say that an uptrend is overbought. So if you look at an oscillator whose job it is to identify overbought and oversold within the context of a trend, it doesn't have a gear to acknowledge that the market's actually trending. It's always going to look at the market from the standpoint of some sort of range. I hope that makes sense. So I don't believe the market's overbought. I don't believe that I don't believe that we're overextended, or we might be flirting with having gone for a period into parabolic action, meaning the current price has exceeded 1.5 times the daily price movement range. So it's a historical volatility assessment. And that period of parabolic movement doesn't mean the market's ready for a downturn. It just means that the pullbacks are likely to be a little bit more volatile. I hope that makes sense. We're going to be diving into these topics and a whole lot more in the live trading in just a couple minutes. So what do I make of AMD? And that comes from, what is going to happen when the Federal Reserve, because that's what we're all wondering. Does this market just collapse when the Federal Reserve stops spiking the punch bowl? And I don't believe that it necessarily has to. And I will say that a lot of folks are looking at what the tech bubble looked like and what the market looks like now, and says, "Oh my gosh, we're so much more than this. This is ready for a collapse." And we cannot compare the stocks that were at the in the lead of the tech bubble and the stocks now. It's really a terrible analogy. And if I see that one more time, my gosh, the logic is just ridiculous. Just because in 2001 we went parabolic, think about what stocks and the way the market was behaving based on the weighting of what? Non-revenue generating companies. There's no similarity really to me whatsoever. But I'm bullish, right? I'm bullish. And I have been. And I will continue to be until the signs that the market's turning over are there. So what do I think of AMD? It's a great looking trend. Yeah, Chelsea, it's a great looking trend. It just pulled back on the 18th and the 19th of August. Beautiful. It's taken off. It's pulling back a little bit today, or it pulled back a little bit yesterday. But, and I have it on my list of things to look at, but I can't do anything until we get back down to 103.70, 103.80. I've got to wait for it to get down to the 34 EMA on the high. But it's a nice looking chart, and the path of least resistance is most certainly up. But again, please know the difference. And it's not a matter of right or wrong. It's just a different philosophy. If I see a double green, I'm going to buy either on the 18th or 19th. Okay. If you want to understand what it is I do and whether or not that resonates with you, um, this is the difference between momentum trading and exhaustion trading. If you want to get long on a pullback, this is buy the dip, gang. Start with the environment, double green, pullback, pullback. 18th and 19th were the windows for the buy, not the 23rd. If you're an exhaustion trader, if you're a momentum trader, meaning you want to see confirmation of the market resuming the move higher, which is fine. It's just a different way of looking at the market. You actually are looking at a breakthrough, specifically 106. Getting north of 106 is what triggers that momentum buy. Why do I say 106? It has to do with the candle patterns in this area. And just like that, I'm going to wrap up Charts and Coffee. Thank you as always for all the questions. And Natty Gas. Yeah, I'm still very bullish Natty Gas. This is a pause. I don't know how long remember we talked about sideways markets before? I think it's a precursor to another breakout. I just don't know how long it's going to move sideways. It's still valid. And we still have time on the options. So I'll just have to leave it be. Okay. Thanks as always for all the questions. Thanks for joining us here at Charts and Coffee. I'll see you all in the Sector Secrets Mastery Room in about 20 seconds. And everyone have a terrific day. Be good to each other. I'll talk with you tomorrow.